the markets. I remember jumping off air a little bit earlier today, just after lunchtime. We're up about 0.25%. Come back on for at the close, we're up 1%.
James, an amazing finish for the Aussie market, up by 1%, up 5,157 points. And that means that we're less than 100 points away from a multi-year high and also the high of 2013, which was at 5,249 points. A big factor which is helping the market is the run that we've seen in the materials sector, and that continued today. In fact, you could say that the trade of the moment is that materials space. Every sector in 2013 has been in party mode except this area. And if we continue to see the material space running as it has in the last few sessions, then we could see the Aussie market breaking those multi-year highs. If we just have a look at this sector, I'm going to bring up a 5-year chart of the material space, and this is what it looks like. What you'll notice is that this space has been in a clear downtrend from 2011, but technically there are some good signals at the moment. You can see that we are testing this trend line, so a break of 10,000 points for this sector does signify that that downtrend potentially at an end there. We've already seen the 50-day and the 100-day moving averages being broken positively, and now we're testing the 200-day moving average mark as well. So all up, it does look like it's a pivotal moment for this material space. It has been looking pretty good for the last month, even though it's the only sector to lose ground for 2013 with a loss of 6.9%. So it is an area that we're watching closely. And of course, a big part of this is the spot iron ore price. We saw a massive jump, 4.2% overnight. Is trading at 138.70 US a tonne at the moment. The other stock that we're watching is McMillan Shakespeare. This is a stock that's up 12% today and up a massive 22% in just the last 2 sessions. This is an election. Trade, and of course, after the debate on the weekend, we have seen the odds that the betting companies paying change. So before they were paying $5.50 for a Labor win, now they're only paying $4. So McMillan Shakespeare really just moving on the back of those poll results. So all in all, a great session for the Aussie share market, and I think earnings season very much in focus, but also the material space.
Lifting boats, because looking through a list of the mining services company, outstanding movements today.
James, there's nothing in Bradken's result to justify a 12.4% increase in share price. Now, Bradken was predicting underlying EBITDA to come in at $210 million. They've just managed to beat that, coming in at $214 million. But the reason the shares have run so hard is because 10% of its stock is shorted. It's one of the most heavily shorted mining services companies on the Australian share market. In fact, if we have a look at the last ASIC report on shorter position, if we have a look at mining services companies, it's Bradken as well as Boart Longyear that are heavily shorted. Some other names, ALS, Ausdrill as well as Cardno. So these are the names that we expect to run quite hard if they just come in on expectations, because you see those short positions being closed off, and that's exactly what we've seen in the stock today. We know that the mining services area has been sold off hard, but it's also one of the most heavily shorted areas on the market. So that's really a key thing to be watching going into this earnings season. Some of these more heavily shorted stocks, whether it be in the retail space or the mining services space, if they just come in on expectations, we see these short positions being closed off, and it leads to a fantastic short-term share price performance, as we have seen with Bradken with a 12.4% rise today.
Is that the key point, though, Julia? A short-term spike in prices?
Well, we know with this mining services space, it wasn't the last financial year that really worries the market, or the current financial year. It's the next few years and really where we're going to see this growth come from. And with capital expenditure from miners still decreasing, I guess the mining services companies are still having a pretty hard time of it in terms of future earnings. So it's not really the current environment, because order books are still relatively strong at the moment. It's the next couple of years that we're worried about. Having said that, if we continue to see an improvement in commodity prices, well, we may just see capital expenditure starting to pick up again, but that isn't the consensus view. The consensus view is that we are going to see earnings struggle over the next few years, and the reason why we've seen Bradken spike so much today is because of the short sellers closing out their positions.